What's up, guys? Welcome back to my channel. If you find the information on this channel helpful, please like, subscribe, and hit the notification bell. The most important thing that will help any beginner trader grow is screen time. It's hours of putting our theoretical knowledge into practice in real-time market conditions. However, the issue with that is, as we're still learning, we can burn through a lot of our hard-earned capital that way. However, I have a trading gem that's going to solve that for you right now. The gem I'm talking about is On Demand by Thinkorswim. What On Demand does is it allows us to go back in time and test our theories. It's a very powerful backtesting tool that has historical dates going back to 2009 to the present date. So I'm going to jump into this tutorial now, and we're going to be using Netflix as the example, and we're going to go back in time to April 19th and play that particular earning report and see 3 different strategies and see how each one plays out. So without further ado, let's jump into it. So the first thing you want to do is you want to click on your TD Ameritrade Thinkorswim app. And even though this is technically paper trading, you click live trading before you sign in. All right, so our app is now open. As you can see, we are on today's time frame. It's July 13th, and you can see Netflix is now trading at $173. Now, the first thing that we got to do to access On Demand is go to the top right-hand corner, click On Demand. Then you're going to notice that the account has switched to a virtual account. And as you can see here to the left, they start us off with $100,000 buying power. Now, if you don't actually have a large account like this, I wouldn't trade with $100,000. I would take trades that I would usually trade in my regular account. So as you can see now, we are on July 11th at 9:30. And we're going to click here in the top right corner, and we're going to change it to April 19th. Right, and we're going to set the time, well, here it is at 9:30, which would be the opening bell that day. So as you can see, the market opened on April 19th with Netflix trading at around $334 per share. So what we're going to do now is test 3 different strategies and see how they would have played out. We're going to do a call option, we're going to do a put option, and then we're going to try a straddle. So a straddle is when you buy a call and you buy a put with the same expiration date. Now, the reasoning behind this is if the stock makes a major move, it doesn't matter which direction it goes, you're still going to make a profit. So let me get into the first example, right? So as you can see, these are our strike prices. And for a call, let us say we happen to be bullish on Netflix and we believe it's going to make a major move to the upside. We can buy, I would buy 2 contracts here. And as you can see, the total cost of this trade is $1,440, right? So we just purchased here. And as you can see, the trade executed. And we are now in the Netflix calls expiring on April 22nd, the 360 calls. Now, we can use our tool now to fast forward to the next day and see how the strategy plays out. So we are going to go to 9:34 a.m. the next day to see what would have happened to our premium. Now, as you can see, Netflix fell a huge gap down here and is now trading at $241, and our premium is all gone. That would have been a $1,400 loss on that particular trade. Now, let us go back and test the put side of things, because as you can see, the Bulls got totally annihilated on that play. So we're going to reset the account first. All right. Now let's go back. And we did the 360 calls. So if I'm bearish, let's say I didn't know what was going to happen, I would possibly buy the $310 puts. So as you can see, the total cost for this trade is $1,550, right? So if we fast forward to the next day, right? As you can see, initially when you enter the trade in the morning, you know, it starts to go against you. But as we fast forward the next day, when the market opens and Netflix takes the plunge, that is a $12,000 profit, guys. Yep. $12,284 you would have been up on this contract. Now, either strategy would have been a gamble, because you don't know which way it's going to go with earnings, because sometimes you will have a good earning report and they dump the stock, and you have a bad earning report and the stock goes up. With earnings is essentially a gamble. We don't know which way it's going to go. But a way to mitigate that risk, if you feel like the stock is going to make a major move, what we do is we enter into a straddle. So like I said before, a straddle is buying a call and a put that's expiring on the same day. So let us go back again to April 19 and test out how a straddle strategy would have worked on Netflix earnings that day. So again, I'm going to do the 360 call, right? So no, that's wrong. We wanted to buy two contracts because we're going to do the exact same thing. So we're going to do a 360 call, right? That trade is $1,560, right? And then we are going to do the 310 puts. This trade is $1,510 as well. So we spent $3,020 for this trade. Let's see how it's going to play out. In the initial stages, as you can see, it's up $45, right? That's the call option, but we all know how it played out on the call side. So let us fast forward to the next day. So as you can see, we fast forward to the next day when market opens, and you are now up $11,092 in profits from that trade. As you can see, we lost $1,500 on the call side. Those premiums went to pretty much zero. And the put side, we made $12,600, right? Now, in my opinion, this is the best way to play this strategy. Yes, you put out twice the amount of cash outlay for this trade, but we're able to have some insurance then. So if it goes up, we're going to make money. If it goes down, we're going to make money. So we paid double for that sense of security. Now, the flip side to this is how you can lose on a straddle is if the stock trades sideways in a tight range, you're going to come out of that trade at a loss. You have to have the straddle make a major move for you to actually profit from this strategy, guys. If you found the information in this video helpful, definitely like, subscribe, and hit the notification bell. Thanks for watching. I'm out.